Hey guys, welcome to the Silver Report. Here we are. It's Wednesday, March 29th, 2017. We have gold currently trading at $1,252.20. Silver's trading at $18.26. And let's get right into some of the economic factors that will be playing a part in the price of precious metals. We are seeing a major weakening in the financial sector within the United States. And what we've seen is that financials, they also took a major hit with the stock market. We see Wells Fargo customers, they just got $110 million in settlements over fake accounts. Now, we saw in the news about the Canadian banks doing this and taking over and creating fake credit limits and maxing people out and giving people overdrafts that were not real. And the same thing is taking place here in the United States. Wells Fargo customers, they're finally getting a little bit back. They've reached $110 million preliminary settlement to compensate all customers, and their claims are that the bank opened fake accounts and other products in their name. It's the first class action settlement by Wells Fargo since authorities revealed in September that the bank opened up 2 million fake accounts to meet unrealistic sales targets. And they've been eliminated since then, but one thing that we've seen is that Wells Fargo has been closing a number of branches around the country. And they were blaming it. They were saying it was because they moved to digital and card-backed banking, and they were still able to operate with less employees. So they were just doing what made financial sense, right? But it seems like Wells Fargo is a lot more on the rocks than it would like a lot of people to believe. Wells Fargo said on Tuesday the payments to customers will be in addition to refunds the bank has already paid out. So the settlement is expected to cover several lawsuits, including the one filed in May in 2015 in the Northern District of California. A separate one launched last September by customers, as well as 10 others. Wells Fargo's $110 million settlement, it marks a reversal from just a few months ago when it tried to kill a fake account lawsuit, and they were trying to avoid it and get over it. So the $110 million settlement, it covers all persons who claim that without consent, the bank opened an account in their name, submitted an application, or enrolled them in a product or service. The period covered begins on January 1st, 2009 and ends whenever the settlement is executed. Now, if you're a customer of Wells Fargo and you believe that you were impacted by one of these fake account scandals, you don't need to take action yet because the court still needs to sign off on the agreement that is reached in principle. Wells Fargo said once preliminary approval is received, a notice will be sent out explaining the process for customers to make claims. It's not clear yet how each customer is going to receive their money, but this is just really actually quite alarming. What we're seeing is that these major banks around the country, we know that Citibank, JP Morgan Chase, that these banks in Manhattan last year were shutting down ATMs. We're not allowing people to withdraw cash. And they were limited. And this was not just one occasion, but several occasions. And Wells Fargo, as we already mentioned, they've been shutting down operations and banks and small branches throughout the country. And we see that things are really a lot worse. One thing that we can point to is the fact that the Federal Reserve is beginning to pull back QE. Yes, it has been pumping fake liquidity into the markets. One alarming trend is that the Federal Reserve said that they have been buying stocks and pumping up this fake market. For example, whenever there's been any kind of lows that have taken place in the market recently, they've bought in with some of this fake money that's been printed. They've pretty much been giving a platinum card to go out and to spend this fake paper money wherever they need to in order to keep the illusion of a healed economy. And so with this QE, what we saw as they painted us this picture of this Obama boom, it was really in an effort to just get Hillary Clinton elected. Because as we see that as the QE tapers off, that these banks are really not doing as well as they said. That they're really on the ropes. And the same tactics that we saw taking place over in Canada, we're seeing taking place here in the United States. It doesn't look well, and we must always remember back to 2008 what happened. When Lehman Brothers came out and said they were bankrupt, and, you know, Wachovia went under. All of these major banks, they were all interconnected, and we're looking like Wells Fargo is also on the ropes. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys so much for stopping by. As always, stay safe.